Welcome to Explain the Charts, your go-to channel for in-depth market analysis. Today, July 23rd, 2025, we're diving deep into the S&P 500, represented by the SPY ETF, which has been making significant headlines. Recent news indicates a remarkably bullish sentiment in the market, with the S&P 500 achieving new record highs, even closing above 6,300 for the first time. This surge is largely attributed to a robust wave of earnings reports that have exceeded expectations and positive developments on the trade front. Specifically, the U.S. has struck new trade deals with key partners like Japan, the Philippines, and Indonesia, boosting investor confidence. We've seen Dow futures pop significantly following these announcements, signaling broad market strength. However, it's important to note some analysts are cautioning, with one Bloomberg report suggesting a potential 7% to 15% downside for the S&P 500 from current levels, which provides a contrasting view we need to consider. Now, let's shift our focus to the daily chart for SPY to visualize these macro trends. Looking at the entire dataset, we can clearly see a strong, sustained uptrend that has dominated since early 2024. Notice the consistent higher highs and higher lows, a textbook sign of a bullish market. The rally has propelled SPY from the low 500s in early March to its current levels near 630, reflecting the underlying economic strength and positive news flow. There was a notable correction in April 2025, presenting a significant test for the market's resilience. Let's zoom into that period to examine the price action more closely. From early April, SPY experienced a sharp decline, plummeting from around 564 down to an intraday low of 481.8 on April 7th, marking a substantial pullback. However, this sharp drop was met with equally strong buying pressure, as indicated by the subsequent candles. The swift rebound from 481.8 to close at 548.62 on April 9th, an impressive 11.18% single-day gain, highlights a strong demand zone around the 480 to 490 area, establishing it as a crucial support level. Returning to the full daily chart, we can see how this April low of around 480 served as a robust support zone, preventing further downside. Since then, SPY has resumed its upward trajectory, breaking through previous resistance levels to establish new all-time highs. The current price action is hovering near 628 to 630, which now represents a fresh resistance area as the market attempts to push even higher. Previous resistance levels, such as the highs around 570 in late September 2024 and 610 in mid-February 2025, have now converted into strong support zones. The daily volume generally remains healthy, supporting the current uptrend, although we did see spikes during the April downturn and recovery, which is typical for major reversals. For long-term investors, the trend remains unequivocally bullish as long as SPY holds above these converted support levels. Shifting our attention to the 1-hour chart, we can examine the more immediate price action over the past week. Looking at the period from July 7th to July 11th, SPY has shown some consolidation after its significant run-up. We observe a range-bound movement between roughly 619 and 626. The chart indicates periods of slight pullbacks followed by quick recoveries, suggesting continued underlying buying interest. Volume on the hourly chart reflects typical intraday patterns, with higher activity during market open and close. The price is currently showing resilience around the 620 to 622 area, which has acted as immediate support in this time frame. Resistance for this hourly view is around 626 to 627, where previous rallies have met some selling pressure before the most recent surge captured in the news. Moving to the 15-minute chart, we gain an even more granular view of the recent market movements, specifically from July 21st to July 22nd, capturing the reported record highs. This time frame clearly shows the aggressive upward move that pushed SPY into new territory. The price broke decisively above the 628 level on July 21st, pushing towards 631, confirming the news of new record highs. Notice the strong upward momentum with relatively consistent volume during the breakout. After hitting the initial new highs, we can see some consolidation and slight pullbacks, but the price is consistently holding above 628. This 628 level is now acting as a critical intraday support, suggesting that dips to this level are being bought up. The immediate resistance is the recent peak around 631.54. Traders should watch volume closely. Sustained high volume on upward moves reinforces bullish sentiment, while declining volume on rallies or spikes on downturns could signal caution. So, what are the reasons to be bullish or bearish on SPY at this point? On the bullish side, the market is currently riding high on strong corporate earnings and favorable trade deals, indicating a healthy economic environment. The long-term daily chart clearly shows a dominant uptrend with strong support levels identified, such as the 480 area and more recently 570 and 610. Dips are being bought, signaling strong investor confidence and institutional support. Conversely, reasons to be bearish include the market being at all-time highs, which can lead to overextension and increased volatility. The warning from Bloomberg about a potential 7 to 15% correction cannot be ignored, suggesting that a significant pullback is plausible, perhaps due to profit-taking or unforeseen negative news. Furthermore, some price action on the hourly and 15-minute charts shows slight consolidation at these peaks, which could precede a short-term reversal if not quickly overcome with fresh buying volume. In recap, key price levels to watch for SPY are the newly established support at 628, followed by stronger long-term supports at 610, 570, and critically, the 480 to 490 zone. The immediate resistance is the all-time high of approximately 631.54. For short-term trading, a break above 631.54 with conviction and strong volume could open the door for further upside towards the 635 to 640 range. However, a sustained break below 628 could signal a short-term pullback, potentially retesting the 620 to 622 area or even lower towards 610 if the selling accelerates. An unbiased prediction suggests that while the overall trend remains bullish, a minor consolidation or pullback is likely in the short term, perhaps a 1 to 2% correction from the highs. This is reinforced by the rapid ascent to new records, making some profit-taking expected. The likelihood of a deeper 7 to 15% correction, as suggested by some analysts, is moderate, around 40%, but would require significant negative catalysts, such as a surprising inflation report or a shift in Federal Reserve policy stance, which are not immediately evident but always possible. Long-term, the bullish sentiment remains robust, around 70% likelihood of continued uptrend, provided earnings remain strong and global trade relations continue to improve. Keep an eye on upcoming economic data releases, particularly inflation figures and central bank commentary, as these will be crucial in dictating SPY's next major move. Additionally, monitor corporate earnings reports for Q3 2025 as they begin to roll out in the coming months, as they will provide further direction.